Hello, friends. How are you? Nice meeting you after a long time. Now we are going to take one more subject, the break-even analysis or break-even point. So it is nothing but extension of contribution analysis. Already we have discussed at length about the contribution. Now it is an extension of the contribution analysis break-even point. So every businessman wants to make a profit. So that is no doubt in it. We are running the business to make a profit. But there is a condition for this. That condition or the prerequisite has to be fulfilled. And that condition is called break-even point. So first of all, they will say, what is your break-even point? So what is break-even point? See, it is break even. The word suggests that it is breaking even. That means it's a point at which there is no profit, there is no loss. We can put it this way, at this point, all costs are covered. With your income, with your sales revenue, all your costs are covered. That point is called break-even point. So, break-even point is the point at which you will make no profit, no loss. It is equal. That means total revenue is equal to total cost. We already discussed at length about variable cost, fixed cost. I need not explain here also because first two sessions I have explained in detail what is fixed cost, what is variable cost. Okay. So now this is the point where you make no profit or no loss. It's a point at which this all costs are recovered. The moment all costs are recovered, what are the one unit if you sell above the break-even point, it will bring profit. It will bring profit. All the points sales above break-even point will bring you profit. If you just break-even point, if you just go down below the break-even point, then you are incurring losses because you are not even covering the cost. So it's very important. So every project report, there is a separate column or a provision for break-even analysis. In the project, if you are not making any break-even analysis and the project is incomplete, bankers will ask you, others also will ask you, and your partners will ask you, what is the break-even point? Have you broken even? Now, have you achieved a break-even point? So, break-even point is nothing but there is no point at which there is no loss or no profit. So, this is what I'm break-even point at which there is no profit or loss, no loss. So, what does it mean? Total revenue is equal to total cost. That's all. Total revenue is equal to total cost. So let us see. See, if supposing break-even point, your break-even point, suppose you are selling some units, some making some products. You're just break-even point. You're breaking at 200 points, 200 bags, 200 puffs, 200 breads, whatever you may be, 200 castings, etc. So if break-even point is at 200 units, then whatever is above, it will bring you profit. Okay, it's very clear. So if suppose break even is going up, break even point is going up. Instead of 200 units, you are breaking even. If you are just breaking even at 400 units, then profit will be reduced. Lower the break-even point. Suppose at 250 units, 150. If you are producing 150 units, if you are making your break-even, then profit will be more. So higher break-even, lower profit. Ulta, there is an inverse relationship. There is always inverse relationship. If a lower break-even point, then profit will be higher. You should understand. So there is always inverse relationship between these two. So you always should aim at breaking even at low level. At low level, then only you can make profit more. So when your two competitors are there, he is able to break even at 200 units. You are able to break even at 300 units. Then he is making more profit than you. You understand this? So very important. So if the sales above break-even point is increasing, profit. If sales falls below break-even point, you are definitely incurring a loss. Definitely incurring a loss. So very important. So your starting point is break-even point. So we have seen at break-even point, there is no profit, there is no loss. So that is the point, that is the level benchmark you should attain. Now let us go work with this one example. How to calculate the break-even points in units. Okay, if you calculate, if you find out the break-even units, then you can just multiply by sales price equal to, you will get the break-even sales. It's not a big thing. Okay, so let us say in a bakery, is producing chicken puffs. For example, to make you understand, I will take a very simple example. So this is per month statistics. Okay, so what is saying, fixed cost rupees 1000 per month. Okay. Rent, let us say rent, all year. So many other things also will be coming. Extra expense, you must be knowing. For example, I'm taking is only rent. Okay. The variable cost is rupees 6 per puff, chicken puff. Then again, sales price rupees 10 per puff. Now I want to find out at what level I break even. What is the level of production at which my business unit has break even, at which there is no profit, there is no loss. So simple formula is again break-even point in units equal to total fixed cost divided by contribution per unit. Contribution per unit. Already I have discussed at length in all previous sessions what is contribution. By this time you must be thorough with this concept, contribution. So what is contribution? Contribution is nothing but sales minus variable cost. Okay, sales minus variable cost. So in this case, contribution per unit, what is that? 10. Now 10 is sales price minus 6 equal to, this is only minus 6 equal to, so this is minus, then 6, 10 minus 6, 10 minus 6 equal to 4 per unit. Okay, 4 per unit. So what is the total fixed cost here? 1000. What the contribution per unit is 4. So 250 is a break-even point in units. If you produce 250 chicken puffs, then total cost will be recovered. Total cost will be recovered. I already told you, break-even point is the point at which there will be no profit, no loss. So higher the break-even, lower the profit. Lower the break-even, higher the profit. Okay, that is simple truth. So you can understand this. So let us say if you sell 250 above, then you can make a profit. But if you sell below 250, you will be incurring a loss. First, your fixed cost will go out, then the variable cost will go out. There will be some total operational inefficiency. You have to take stock the marketing and the other internal aspects and to find out why you are incurring loss. So if you sell below 250, then it is loss. If you if you produce 250 and sell above 250, then you will have a profit. So now I already told you in the break-even point, there will be total revenue is equal to total cost. Let us test it out. So in this case, 250 is a break-even units. So in this units, their unit is making no profit, no loss. That means all costs are covered, but all revenue is equal to all cost. Let us say total revenue is equal to total cost is the break-even point unit. Okay, break-even point. So let us say in this case, total revenue is sales price. So 250 total units into 10. This is the revenue. Then total cost consists of two things. One is fixed cost and is variable cost. What is fixed cost? 1000. What is the variable cost? 250 into 6. 250 into 6. 1500. So 2500, 2500. Total revenue is equal to total cost. This is break-even point. This is break-even point. The break-even sales at which there is no profit, there is no loss. Now we'll have to test it out. I already told you, if you sell below 250, you will incur below 250 you will incur a loss. If you sell 250 above, you will incur a profit. Let us test it with some hypothetical examples. The same bakery. Let us see. Then whether we will find out whether our answer is correct or not. Because I already told you, if you sell 250 and above profit, if you sell below 250, let us see, we will incur a loss. Let us now find out how it happens. Okay. Already, I just told you that the break-in point is 250. That in particular example. Okay. Now let us see. Supposing it comes below, supposing it goes above. I already told you, if the sales falls below 250, you will incur a loss. The sales goes above 250, you you make a profit. Let us test it. Let us test small example. So one unit is 200 units is producing. The same break-in point is producing 200. So, but break-in point is break-in point units is 250. So let us say for 200, let us see now 200 total revenue is equal to same example. Only thing is production and number of units is just changing. Okay, so same 250 break-in point. Okay, and the same example. So he is not able to produce 250. He is able to produce only 200. So what is the 200? What is the revenue is 200 into 10? Okay, 2000 total sales. Okay, what is the total cost? Variable cost equal to 200 plus 6 equal to 1200. Then fixed cost 1000. Fixed cost will remain the same. Whether you run the business or not, whether you open the shop or not, whether you open the factory, you have to pay the rent. You have to pay other fixed costs, fixed expenses. So it's inevitable. So you have to do it. So total how much is there? Total cost 2000. Whereas total revenue is 2000. So what is the thing is loss is only 200. Loss is only 200. So 200 units producing below break-even point is incurring a loss of 200. So let us say 400 units. He's produced he's improved it and he has made a point to produce 400. Then what is the revenue? 400 into 10 sales price. This is 10 rupees is sales price for last example. So 4,000. So where the variable cost 4,400 into 6, 2,400. And fixed cost 1,000 remain the same 3,400. Total revenue is 4,000 whereas cost is 3,400. Profit of 600. Profit of 600. So it's very easy, no? So you should always aim at crossing break-even level. You should always aim at cross-even level. That is how your efficiency lies. If you're not able to achieve even a break-even, then you have to think twice where that has gone wrong. Okay. Now there's one more concept I'm introducing: margin of safety. Same thing, extension. Margin of safety. What is your margin of safety? Safety means safety zone. That's all. Margin of safety means safety zone. What is safety zone? Existing sale. Let us say 875 puff is producing. 875 puff is producing. 250 break-even units. 250 puffs is a break-even unit. So what is the margin of safety? 625 units. 625 units. So margin of safety is 625 units. So let us say in this case, margin of safety. Existing sales is 875. Okay. Break-even point taken sales is 250 units. Then what is the margin of safety? 625 units. Okay, 625 units. Now there are three scenarios I'm just bringing to you notice because I want to convey one important lesson. So very important. Let us A. A is running a bakery. So his break-even point is 250. He is producing 875. So what is the margin of safety? 625. Okay. Now, second is B. The B is his break-even point is 350. He has just slightly gone above under 250. So he instead of breaking even at 250, he is breaking it at 350 units only. So what is the margin of safety? 525. Okay. Again, profit is shrinking. Profit has come down. In this case, profit is more. In this case, profit has come down. Third, C. Another, he is not able to run the thing efficiently. There is some problem. 875 is producing, but thing is at 500 units only, he is breaking even. At 500th level, the puff, he is breaking even. So what is left out margin of safety? 375. So what you do it? What you infer? What you come to a conclusion? So margin of safety, A category, lowest BEP, break-even point, margin of safety is higher. Okay, first. Second, margin of safety in this category, break-even higher, break-even point higher, little higher. So margin of safety has come down. Okay, right. So third C, margin of safety is 375 because his break-even point is the highest. At only 500 units, he is able to break even. When you produce 500th puff, he is covering all the cost. What is left out? Only 375. So our aim is to attain low level of break-even point. You understand? We have to achieve a lower level of break-even point. Or you can put it this way, you have to achieve higher margin of safety. All same. Break-even point level is coming down. If it's coming down, margin of safety will be going up. If its break-even point is going up, you have seen here. Break-in point is going up, margin of safety will be shrinking. Then it is involves a risk. Bankers may not give a loan. Please understand this. Okay. So I told you already. So break-in point should be lowest or margin of safety should be higher. So now much a challenge comes. Sir, you are telling me all these things, sir, and how to reduce the break-even point at lower level, how to achieve higher margin of safety or lower break-even level. So we'll have another session completely devoted on this subject, how to achieve a lower break-even point level. Okay. So till such time we'll meet again. Wish you all the best. So my friends, take care. God bless you. Thank you. And please tell your friends to subscribe and tell others people also to view the channel because they will be greatly blessed. I'm only doing with the only service motive, nothing else. Please spread this message to other friends also so that they will also be blessed. They will also come with all success stories. Thank you. God bless you.